All right, let's get started. We have Swapman and Nirmal with us today. Go ahead, Swap.
Thanks, Terry. Hey, everybody. We're here for another webinar to give an update on some of the beta testing progress and also a new idea that the team has been working on, which is a pretty exciting one we wanted to share with the community, which will be a sort of improvement on the staking model that we currently have. Most of the team is in California right now for this conference, and so that's why this webinar is going to be a bit shorter, and it's just a couple of us. But I think you guys will be pretty pleased to see what we have in store here. So first things first, an update on the beta program. As we said last time for the last webinar, we've got a new front-end designer, a new front-end developer that is doing some design and UX work. And his first project was to improve the staking app, which lots of you have correctly pointed out doesn't have the smoothest UX or the most intuitive UI. So we've got some really big improvements coming up for this. It's almost finished, and on Monday you guys can start testing it. And I think you'll find it much. We're finishing internal testing, but I think you'll find it much more, much smoother than the current experience. And the other thing is that we're now, as we mentioned last time, connecting the Lev fee economy into the trading platform. So the last bits for the overall system are connecting the payment of the trading fees with FEE token and also the fraud proofs, and to have the whole ecosystem flowing. Those last parts will need to be integrated, and so we're making great progress on that. And the paying the trading fees with the fee balance is going to be live as soon as we have deployed the latest build. So just stay tuned in the beta testers group for when this new update is going to be available. But we expect by Monday that both of these new updates will be available for testing. And the next stage that we plan to have ready for that we're going to be working on this week, as these other things are being tested, is that we're going to also once the fee tokens are able to be used to pay the fees on the platform, we're going to then finish the part where the trading fees get swept over into the staking app, so that the testnet staking app will actually just more smoothly integrate those transactions, so that it's just constantly running with the platform being active and fees being paid, and then the staking periods dispersing fee tokens. And then so on testnet you'll see all of the different parts finally together. And then the final part of the Glue on Plasma development that we are finishing up is the bonded withdrawals, which facilitate these fraud proofs in order to make the whole Plasma trading fully trustless. So that's arguably the most important part of it. Even though everything is trading and working fine within the Glue on Plasma sidechain, it's all for naught if there isn't the proper trustless implementation, which relies upon the fraud proofs. So that's going to be exciting once we reach that point. So once these builds are released on Monday, we expect a lot of things to be tested, and then we'll be hitting these next points in the coming 1 to 2 weeks as well. So just to give you a visual of where we are on that process, this whole, the staking contract we've had built from the start. The only thing that we are putting in place here now to complete it is the platform trading fees. So right now, we had the platform trading and working, but we haven't put in this part where the fee, if you have the FEE token balance in your account on the Plasma chain, then these will be used to pay the ETH equivalent for your trading fees on LEVERJ. So that all these other things, it's already done. It's already got the whole functioning for the staking and the disbursements. It's the only little thing we have to connect is the trading platform to use the fees, and then having those fees sent over into the actual staking contract so that it makes the full connection with the activity on the platform and to what the Lev stakers are able to get a piece of the action for. So this is like I said, by Monday should be in place on that one. And here's another infographic that one of our designers has put together. It's a little bit, there's some updates we have to do to this, but just I wanted to show you guys visually how it all comes together and what exactly the next steps are in this context. So in this image, and by the way, it says here Plasma Gluon, but we are calling it Gluon Plasma, but all these other Plasma flavors are tending to use this format of Plasma Cash, Plasma Debit, Plasma, etc. So, but we are trying to keep it to Gluon Plasma. So, but in any case, so here on the right side, you have the on-chain part of the ecosystem, and on the left side, you have the off-chain part of the ecosystem. So the off-chain stuff is where all the matching happens, and where you have the fee and ETH order book, where everyone can trade for the fee tokens if they want to get rid of them and receive ETH instead, or whether they want to acquire fee tokens in order to get a discount on trading on the platform. And so again, as in the prior picture, most of this is already built. So we've already got the Plasma chain working. We're just working on the trustless aspect. So this green guy here is the last part of this model that we are fixing up. So all of this, the trading platform is live already. The off-chain matching, API key registration, all of this is done. The integration between the staking and that also is all done. What we just need to finish here is the trustless aspect, which is all the fraud proofs, and we've got a great plan for it. And Nirmal and Benny and Shashank and Bharat, they've really done some great brainstorming on this issue and come up with some really elegant solutions. So we expect significant progress on that by next month in August. We'll be pleased to have some nice testing to do of these fraud proofs, which will be really interesting because we, as we are testing that, we'll need to basically we'll be forced to commit various forms of fraud in the model to see how exactly it reacts. So you guys are going to have a nice clear view of what happens in the worst case. What if the exchange gets hijacked and lies and puts in fraudulent ledger entries in the chain? How does that affect other traders? We're going to go through all of those things next month once the fraud proofs are all in, and it'll be nice and clear hopefully by then, after we have articulated some of the specific solutions for how this is going to be handled. So there's some interesting developments going on in general for Plasma, and we're excited to see some other projects that have made really significant progress in areas with like Plasma Cash and such. We still think that the Gluon Plasma offers something much superior in terms of the user experience in the exchange context, and we look forward to presenting this model as an alternative and seeing how the other guys working on various Plasma implementations, what they can get out of it as well. So aside from that, wanted to introduce this new concept, this new sort of model that we've been developing in the team. The name is just experimental, so don't. It's not the best name, but we are calling it LevQuidity for now, which is an idea we have to basically, instead of LEVERJ being the only exchange that is utilizing Gluon Plasma and having just a kind of like a centralized exchange experience there, we wanted to endeavor to decentralize the model more and allow multiple exchanges to engage with not just Gluon Plasma as a technology, but also our whole Lev token and FEE token economy. We've had a lot of interest from exchanges that are asking, how they can build something that integrates with Lev and fee and the staking, and how they can get involved with Gluon Plasma, and what sort of ways they can connect to what we are doing. So that's what has inspired us to put together a model for how basically we can't allow other exchanges to plug into it, and how this will benefit Lev token holders and stakers, where you basically will have a nice variety of projects that you'll be able to expose your staking of tokens to. So the main idea of LevQuidity is that there'll be shared order books. So there, if you have 4 different exchanges that are trading a pair like let's say Lev ETH, which would be just the Lev token quoted in Ether. This would be an order book that has Ethereum assets on the base pair and the quote pair. So it's all possible to do over Plasma. So any kind of exchanges that have this kind of order book where both of the assets are based on Ethereum, then they can just hook into Glow on Plasma, and they will then be able to tag whatever liquidity they are sending into this off-chain order book, and they'll be able to then mark exactly what contribution they are having to the overall volume. So then they are benefiting. Not only are they contributing to the overall liquidity, but they are benefiting from the network effect as well. So exchanges have a clear incentive to get involved and plug in. And then finally, for the staking side of things, these will be bucketed. So when if you have a bunch of Lev tokens, instead of only staking towards what LEVERJ as an exchange is doing, you'll be able to pick between all kinds of different projects. So you'll be able to stake towards LEVERJ and maybe stake towards LevPredict, which would be a different prediction market project, or any other project that is interested to use the FEE tokens and set up their own sort of project tag within LEVERJ as an ecosystem that uses Glow on Plasma. So not only does it allow exchanges to get involved and to tag the liquidity and to play a role in the overall development of the markets there, but Lev stakers get a huge benefit because there's a lot more that they can then get involved in. So I wanted to show this diagram. The left side is what we already have. This is the single exchange model, and this is just where we have Lev stakers. They stake Lev to a single, just a normal staking contract, and then LEVERJ as a platform, as an exchange, earns fees from trading, sends it to the staking contract, and the staking contract disperses the fees back to the Lev stakers. So that's the simple single exchange model. And here on the right side, we've got this multi-exchange model now, where basically Lev stakers will now be able to take their Lev tokens and to tag them when they are staking. So when they instead of just sending it to a staking contract, they now have to send it to the staking contract and tag it into a specific bucket or tag it to a specific project. So there's a choice then, multiple choice when you are staking between what you are going to allocate it to. And then that specific project, however well that project is doing, you'll be gaining exposure for the Lev tokens, and any FEE disbursement, you'll get a piece of it from that specific bucket. So that way, instead of it being socialized across all of the projects, each project is able to stand out in the crowd, and then Lev stakers can just optimize their portfolio choice between, LEVERJ or exchange X, Y, Z, or whatever. They can just, after each staking period, they can just reallocate their portfolio however they see the opportunities in the other projects. So this is going to enable multiple verticals to get involved in LEVERJ and Glow on Plasma, which will boost liquidity on LEVERJ, and will also give any Lev holders a lot better opportunity to not just have a single simple model, but to have more choice. So just a quick example to run through in case it's still confusing to anybody, but let's say that exchange ABC has some limit order in the book, and then the exchange XYZ is taking this liquidity. These guys would have a taker tag and a maker tag, because every single execution in an order book exchange has at least one maker and one taker. So we'll always be able to tag these, and then we'll be able to trace all the different executions that are happening within Glow on Plasma. We'll be able to trace who is responsible and what projects have contributed to it. And so then the exchanges end up, we have the central shared order book that then is putting it into the side chain, and all of the fees that are paid, within that execution also carries these tags, so you'll know exactly how many fees were paid for the taker and the maker, and which exchanges are responsible, and those go into the buckets which the Lev stakers then receive the fees for however many have been staking within that bucket. So one of the first questions maybe is then, why would an exchange want to even use this liquidity? Why would they want to share their fee? Well, first of all, you can, the way that we are planning to build out this model is that we want to be able to give projects the choice of how much fee they are going to give up. So so one idea we could do is to, every time you are going to create a project, you would have to stake a certain amount of LEV tokens. So let's say that you have an idea to use Glow on Plasma and LEV and fee tokens. So you want to create a project. So you have to have a project stake. So let's say it's 1 million LEV. So you have to acquire 1 million LEV, stake it within the staking contract to create your tag, and then you specify how much of the fee you want to keep. So you can keep 100% if you want, but then this would potentially then require more LEV, which would then give you an incentive to use less LEV in the beginning, and then you have to share some of the fee that comes about from the project. So this is just one approach, one way that it can look. Again, this is all these are a general idea that we have designed. It's not something that's going to be in place right away, but this is an approach that we have been developing internally in order to make it more decentralized as an ecosystem, and sort of a more useful protocol that anybody can get more involved in. So the benefits of this kind of approach versus the current one is that exchanges who adopt the any Ethereum order books into this model, they would obviously have less of a headache dealing with user transfers, because centralized exchanges, even they have less of a headache if they don't have to deal with these user withdrawals and all kinds of other stuff. If users are able to just interact with the Plasma chain directly and not have any kind of approval for withdrawals and such, it's much more smooth. And obviously the order books would be much more liquid. And right now ERC20 token markets are completely dry in terms of liquidity. So this is a huge issue that nobody really has a direct coherent solution to. So if any of all those who are interested in the Plasma implementations just pool their liquidity into Glow on Plasma, this would it would be much smarter than dividing up all liquidity between different competing projects. But and then of course exchanges would then have the trustless benefits of Glow on Plasma, because the fraud proofs make sure that nobody is going to cheat us, even the exchange that is ultimately doing the matching and holding the order books. And for the benefits for LEVERJ, for those of you who have participated in the token generation event and such, you are able to have multiple projects to stake your LEV to. So instead of all your LEV just staking towards what LEVERJ is doing, you can stake some of it towards LEVERJ, hopefully, and then others of it towards other projects and other exchanges that are utilizing the LEV fee ecosystem and potentially the Glow on Plasma. So this will give more choice to LEV users. There'll be more more and more projects involved in buying LEV tokens in order to stake to create a project, and they'll be buying FEE tokens in order to get a break on fees and everything. So it'll just add more interaction and more engagement in general for LEVERJ as a project. So okay, that's all I had for that. And that covers the beta program and this new model that we have been toying with. So that's all I had. Jerry, if there's any questions?
Yes.
Yeah.
So we do have a question. Is this just ETH as a single collateral option? And how does the platform prevent an adverse move leaving the platform owed money due to ETH drop?
Okay, this
and I shot you that question in Slack just in case you want to look at it again.
Right, I actually closed Slack when I was moving the screens around. But this sounds like it's a question about futures. It sounds like it's a question about leveraged margin trading, because currently in this context, we are only discussing cash spot trading, which means you're exchanging an ERC20 token for ETH, or you're trading ETH for whatever ERC20 token. We are later on in the year going to be doing the margin trading with the leverage futures, where there's going to be ETH collateral, and that will be, as it sounds like the question was implying, that will be ETH based. And in that context, I'll just briefly address that, even though it's going to be a few months away. But in that context, there will not be a problem of negative balances, because the counterparties are matched bilaterally, and all the P&L that is settled between them, if there's ever a situation where the user is wildly under collateralized, then we merely stop out the users and just reduce the open interest. And there's different, more elegant ways to handle that risk in that system. But just a crude example, you can just slash the open interest. And so if the guy who is, if ETH has gone down and the guy who is long is in a really high leverage position, then you just have to cut off the under collateralized party versus the someone who's on the other end, in order to balance out the system. But again, that's like 2-3 months away. So right now, all this stuff that we have discussed today, this is only within spot, token context.
Okay, great. There doesn't seem to be any other questions. We'll give folks another minute to see if there's anything else, but it doesn't look like it. Yes, you addressed his question correctly. All right, great. Thank you very much, everyone, for joining today. And we will post this webinar up on YouTube within the hour. Thank you very much. Have a great day.